Hi everybody, my name is Matt Hogg. I'm one of the many financial professionals with West Michigan Advisors, and thanks for viewing our videos. Right now, I'd like to give you a little update on what we feel the 2023 economy is going to be doing. We're getting a lot of questions, and we've been hearing a lot of things, so we'd like to give you our take on what we feel is going on.
America is in an anxious mood. Have you wondered or worried about your financial plan? Then let us be your guides. Welcome to First Take, a podcast designed with you in mind. With expert analysis and conversation, our team at West Michigan Advisors will take complicated financial concepts and convert them into easy-to-understand next steps. Thank you for joining us at First Take. Let's get learning.
First, we've received a lot of questions, and I'm going to go with the top three that I think most people are asking us. So the first one is, are we in a recession? The second one is, what is going on with inflation? And then finally, will the stock market stop its crazy ups and downs? And what do we need to do in the future with that? So let's first talk about the recession. Signs say we are not in one, but we're pretty likely that we're going to be one. Is that 100%? No. But we're seeing some things that are saying this is on the horizon. Call them red flags, if you will. So one of the biggest ones that we like to look at is interest rates. And one of the things that you might have heard if you've listened to talking heads on TV is the inverted yield curve. And you go, what the heck does that mean? So what that means is that short-term government debt is higher than long-term debt. And you go, well, Matt, how does that indicate a recession? In the past, that has indicated that there's a recessionary pressures on the economy and a likelihood of one occurring in the future. Does it make it 100%? No. The other thing that we're seeing is a slowing in home sales. Usually slowing in new home sales is an indication that a recession is on the horizon too. Despite having a housing shortage, we are seeing some declines in new home sales, although not super drastic, but it is an indicator that a recession might be on the horizon. The other thing too that we want to talk about is that the Fed is predicting a slow economy. Now, if you ask me, the Fed is partly to blame for that because of the Fed rate that they keep raising, the interest rates that you might hear. And that's the money that is lent between banks, so it makes money more expensive to lend between banks, which makes money more expensive for everybody else. The other thing that they're saying too is that we might see a spike in unemployment, which is interesting because right now we're at very low unemployment. And as of the shooting of this video in early February of 2023, January actually had another decline in unemployment, which is a surprise to many, where they expected a small increase. So we're going to keep our eyes on those indicators. The next one that we want to see is that we have, when will this recession occur if it does happen? What most people think, and all the economists that I've seen speaking over the past month tell me, is that they think the first part of 2023 will be very good until the late summer and into early fall. Now, by the end of 2023 and early 2024 is when we might see this recession. And all indicators say that it will be a short, shallow one, nothing like what we have seen in the past. So quick, hopefully painless as much as possible as a recession can be. So let's talk about inflation. So inflation has been fairly high over the past year, and if you've heard the news at all, everybody's been talking about that. And let's talk about maybe some of the causes that have happened to bring that in, and maybe where the solutions are. So with the worker shortage that's going on, many businesses are willing to pay a little bit extra to bring workers on board. And with that being said, that means it's increasing the wage that people are earning, so they have a little bit more spending power. Combine that with the supply chain issues as we come out of the pandemic. Yep, we're still talking about that. What we're seeing is people are willing to pay a little bit extra for the things that have been tied up in supply chain. So we have limited supplies and people are willing to pay a little bit extra to get their hands on those because they're being paid a little bit more. So that pushes up everybody's wages and causes the increase in a lot of different things. And if you've looked at eggs, sometimes there's just some things that happen. That's the avian flu. And as they fix that, hopefully the price of those eggs will come down and some of that stuff will not remain high. Can we guarantee it? Nope. And all the economists that I've listened to the last month plus keep saying that we will see a normalization of inflation. We won't see the 2%-ish that we saw in the 2010s, but more back to our 50-year average around that 4 or 5%. So that's an expectation that we can see. And the best indicators that they say is that we'll see that normalization happening by 2024. So we might have another year where we have to deal with some higher than average inflation. But economists, again, if you heard me at the beginning, say that we're kind of past the peak of that. And let's hope that we are. So lastly, let's talk about the stock market and its crazy ups and downs. Well, sectors in the stock market, some have done very well, especially last year. If you look at energy, it's one of the best things that we had out there. The overall stock market was down, and one of the best indicators of what the economy is going, in my opinion, is looking at the S&P 500 because it's the largest, it's 500 companies. So it's the biggest indicator of the markets that you can look at a quick glance. Do we think that we'll have a better year than 2022? But that's not saying much because we had over a 20% decline in the S&P. But let me give you a little bit of a history lesson as a history major. In the 70 years from now to 70 years ago, if the S&P had a decline of 20%, there's only 3 times we've ever seen another loss in the year afterwards. So that says we have 67 years of positive growth after a 20% decline. So our hope is that we will see that even with some of the inflationary and recessionary issues that are cropping up. Most of the economists that are hearing is saying if you look at the S&P 500, we'll see about where it is right now. It's probably where we'll end the year at, so probably kind of a flat year. One of the best things that you can do is have your financial advisor right now build a wealth plan to help you reach your goals. What this does is when we get in these markets that are up and down or with some uncertainty in the future, you'll have a path to those financial goals that you'll be walking with your financial professional so that you can review those to make sure that the direction that you're going in those harder than normal years is still the right one for you. If you haven't done this yet, we at West Michigan Advisors would be glad to help you out. And I would ask that you click our link down in our description of this video. There's a link to our website and you can schedule a call there, or click on the email address that's in the description of this video as well. Thanks for viewing this video, and we look forward to helping you down your path to your financial goals. Have a great day.
Thank you for listening to First Take. We welcome your comments and questions. For your next steps, contact us at westmichiganadvisors.com. West Michigan Advisors, LLC is a registered investment advisor. Please visit our website, westmichiganadvisors.com, for important disclosures. The information has been obtained from sources considered to be reliable, but accuracy is not guaranteed. The views and opinions expressed are as of this date and are subject to change without notice. Further information is available upon request. Past performance does not guarantee future results. There can be no assurance the trends mentioned will continue. Investing involves risk, and you may incur a profit or loss. No investment strategy is guaranteed to be successful.